As 2025 has just come to a close, earlier concerns about a sharp slowdown in global trade have not materialized. In its latest report, the Organization for Economic Cooperation and Development described the performance of global trade as surprisingly robust, and expects global trade volumes to grow by around 4.2% in 2025. Emerging markets, particularly economies across Asia, have become an important pillar supporting global trade growth. However, risk factors remain, trade barriers are increasingly globally, and policy uncertainty continues to rise. Looking ahead to 2026, how will global trade evolve? We invite Thomas Heiber, OECD Senior Advisor for China, to take an in-depth look at the global trade outlook and the prospects for China's foreign trade. Against the backdrop of demand volatility and global supply chain restructuring, how does the OECD assess the outlook for global trade in 2026?
Well, thank you very much for the opportunity. We launched the OECD's economic outlook in December 2025. And we believe and we see that the global trade is expected to remain resilient, but maybe slowing in 2026. This is due to the heightened trade policy uncertainties, higher trade barriers, and of course the impact of the trade barriers that are already in place. We estimated that the world real trade growth may reach around 4.2% in 2025. Again, this is partly driven by front-loading of the trade in anticipation of the tariffs, the higher tariffs. However, the trade growth may be again slowing to around 2.3% in 2026. And it might recover modestly to about 2.8% in 2027 as the global demand gradually may improve. And there are a number of factors that impact this outlook.
Looking ahead to 2026, how do you see as the key drivers shaping global trade dynamics?
First and foremost, as I said, the trade policy uncertainties and the tariffs. Our analysis shows that a one standard deviation increase in trade policy uncertainty can reduce global real goods import growth by over 4 percentage points at its peak after 1 year. Higher and more widespread tariffs, of course, can amplify this effect. Secondly, this is the investment and the technology cycle. There is a strong investment related to the ICT sector and artificial intelligence, and this has supported trade recently. But this support is expected to weaken as, again, policy uncertainty weighs on some of the investment decisions. And thirdly, let me touch upon the services trade and the logistics capacity, because services trade tends to be more resilient than the merchandise trade, the trade in goods. But the regulatory fragmentation and some of the restrictions in transport, logistics, and digital services continue to constrain the trade performance. And lastly, this is, of course, the disruptions caused by the geopolitics and climate change, climate-related causes, shipping bottlenecks, conflicts affecting major transport routes, and climate-related shocks may increase the volatility and raise the costs of trade. So overall, our baseline assessment for 2026 is a bit slower trade growth and risks tilted to the downside unless trade tensions ease and policy predictability improves.
Emerging markets have been taking a larger share of global trade in recent years. How is this trend reshaping the traditional global trade landscape?
Yes, indeed. We observe a structural shift in the drivers of global trade growth, with emerging markets accounting for a growing share of both trade volumes and also trade expansions. Emerging economies, particularly in Asia, are contributing an increasing share of global trade growth. Southeast Asian economies expected to play a larger role in 2026 and 2027. But we also observe in this regard that global trade has become more network-based, which is reflecting a deeper fragmentation of production across multiple economies. Around 60% of global trade now consists of intermediate goods and services, and that underscores the importance of cross-border supply chains. It is also we also observe a concentration of global trade. We found that around 30% of traded products remain relatively concentrated. This implies an exposure to supply chain disruptions in specific sectors, and this is why the diversification in supply chains is important, and the role of the regional economies in this regard is going to be more important than it has been before, as production and the supply chain diversification is going on. Just imagine that some of the disruptions may occur in relations to climate change, disasters, pandemics. So the countries are increasingly keen on diversifying the supply chains. Not to mention, of course, the disruptions caused by some of the trade barriers and trade policies in the past. So again, the regional economies, especially in Asia, will have an increasingly important role in global trade and global supply chains. First and foremost, because of the diversification, also because of their growing internal demand as an export market, but also because of their deeper integration in global trade.
China's total goods trade reached 45.47 trillion yuan in 2025. How do you assess the quality and sustainability of China's import-export performance?
It's crystal clear that China has a very solid manufacturing base, which is essential for its foreign trade. But China is also undergoing a major transformation. So Indeed, in 2025, China's trade performed very well, especially in anticipation of the higher tariffs. It has been front-loading its export, especially the first half of the year of 2025. But let's not forget that, of course, the future, 2026 and forward, this is also dependent on the demand, the external demand. So while China is diversifying its markets, and it has been doing supply chain diversification and redirecting its trade and export very efficiently, this is also due to the capacity and adaptability of the Chinese companies. They reacted very, very fast on the market signals and on the trade, on the impact of the trade barriers. But the demand, it will depend on the demand globally, how China's export will grow in 2026. Of course, again, China is undergoing a major transformation. First and foremost, China is already producing and exporting technologically advanced products. And it has been very successful, especially in the green-related sectors. But China is also opening up to imports. And we should not forget that trade, when we are talking about trade, it has export, but also import. And balancing export and import is becoming important also for China. This is why measures have been released about more market opening for products and services. There is a lot of potential in further increasing China's services trade, export and import, which may also balance China's overall foreign trade, and may also boost not only the export but also boost import to the country. And lastly, China's transformation of its trade goes hand in hand with its investment. And China's companies that have been exporting to the external markets for many years are now considering to invest abroad, establishing production bases, manufacturing bases, factories in other countries. They are building their brands. They are reinforcing their reputation, introducing their products to local markets. And this is, of course, going to be reflected in the export statistics of other countries, not necessarily in China. But this is a natural process, since these companies, China's capable and technologically advanced companies, now are more and more investing in other countries, sharing technologies, bringing management and knowledge to other markets. So this is also part of China's external economic relations, a very important component of it. And is also part of the transformation of these external trade and investment activities.
China's 3 new products have shown strong export growth. Does this signal a structural shift in China's foreign trade?
That China is moving up the value chain, the global value chain. This is a fact. China is producing high value-added products already. It's capable to producing these products, and it has been exporting these products to external markets. China is also very successfully improving its services trade, because again, as I mentioned, it's not only about exporting those products, but more and more to put these manufacturing bases as an investment to overseas market. The second important component factor here is that China is building its unified internal market, which means that is dismantling the barriers, the internal barriers to trade. And this is going to release consumption power and also increase demand internally. What does it mean? That China's production, the internal market, has a capacity to absorb a lot of products that are produced by Chinese companies within the country. So this will also not only focusing on export, but also focusing on the internal market, and the internal market has a big potential. So again, creating the unified internal market in this regard will play a very important role. And last but not least, again, what we emphasize here, that countries at this current juncture need a constructive dialogue, transparent, open dialogue about trade, about the standards, the rules of trade, and how to jointly create equal market access and level playing field in global markets.
As one of China's most open and dynamic regions, how do you view the role of Guangdong, Hong Kong, Macau, Greater Bay Area in the global trade network?
I think I can approach this from through a bit of our own policy lenses. First and foremost, as I already mentioned, we're working on trade facilitation, and when it comes to the Greater Bay Area, there is an impact and there is an important role in that this area and the GBA plays an enhanced customs coordination, digital procedures, port connectivity, and this is definitely having a positive impact on trade, improves reliability, and reduces some risks related to deliveries. Second thing that I wanted to emphasize here is talent mobility and services, because high-value manufacturing exports rely on legal, financial, engineering, and digital services. And in this regard, the Greater Bay Area has the potential to reduce the services trade restrictions and lower the trade costs and enhance competitiveness on the market. And last but not least, I would like to mention digital and technological cooperation, because cross-border e-commerce, digital supply chain management usually benefit from regulatory alignment in digital trade. And the Greater Bay Area can and will probably play a very important role in this. And last but not least, China is actively participating in shaping the global trade environment and the global trade in the rules-based global trading system, increasing transparency, predictability, and also reducing the policy uncertainties around trade. This is very important. China is a major trading partner for a lot of countries in the world. And therefore, China's contribution to keeping markets open, shaping of the global trading system, the standards, and also maintaining transparency in the framework of the WTO, it is becoming very, very important. Not to mention that China is also developing its engagement, bilateral trade engagement, and also through regional mechanisms, which is also a very important part of the global trading system.
From the perspective of international cooperation, what concrete steps can countries take to enhance policy coordination, reduce trade barriers, and foster a fairer global trading environment?
Look, even though we may expect a slight slowdown in trade growth in 2026, let's not forget that trade remains a major driver of economic growth across the globe. It has a great potential of creating job places, and it has a great potential to pull economic growth in all the countries. So it is in the interest of the international and the global community to conduct an open and transparent and constructive dialogue about trade, a cooperation and conversation about trade facilitation, mutual recognition of procedures, digital customs systems, risk management, create an open environment and keep markets open. For instance, in trading services, aligning regulations in transport logistics to lower the costs, but also to keep markets open and dismantle the regulatory barriers that are hindering the growth of services trades. Of course, it is also important to use common benchmarks to reduce regulatory fragmentation and improve interoperability between countries, because that would of course help maintain a healthy growth in and maintain a level playing field in global trade relations. And last but not least, it is also important to have a constructive dialogue and cooperation on resilience of global supply chains. I think diversification of global supply chains and maintaining the resilience of global supply chains is becoming very, very important. Unlike localization of production, which may have a cost, an economic cost, according to our calculation, we believe that diversifying global supply chains and making them resilient is the way to improve trade relations and maintaining global trade growth.
Thank you, Mr. Harbour, for participating in our interview.
Yeah, thank you. Thank you. Thank you.
That's all for today's show. See you.